Hello guys and welcome to my channel. In this video we are talking about how to invest in mutual funds. Before we continue our video, make sure to subscribe to our channel and hit the bell icon for more interesting videos. If you want to know how to invest in mutual funds, you've come to the right place. Mutual funds are an important investment vehicle and a cornerstone of many investors' portfolios. However, not all mutual funds are the same. Keep watching to learn how to buy mutual funds and what steps you should take to make sure your investments are right for your goals. Step 1. Identify goals and risk tolerance. Before you invest, think about why you want to put your money into a mutual fund. You should never rush into any investment without first thinking about your short-term and long-term goals as well as the level of risk involved. Mutual funds are generally best for longer-term goals. For short-term investments, exchange-traded funds, ETFs, are a better choice. If you're looking to invest in ETFs, public.com is a great broker. Every investment has a different risk profile. Matching your investments to your personal risk tolerance and goals is vital for success. Mutual funds are generally considered less risky than stocks and have a similar risk to many ETFs. Because a mutual fund typically includes many stocks, investors are not at risk of significant losses due to the poor performance of just one company. Funds spread out your risk among many different stocks. Step 2. Choose between passive and active funds. Next, decide which type of fund you want to invest in. There are many ways to categorize mutual funds, so we will start with the most basic one: whether the funds are actively or passively managed. Passive fund management is usually in the form of index funds. The goal of a passive fund manager is to match the gains of the market. Not only are these investments more consistent over the long run, but they're also more affordable. Actively managed funds, you'll have the around-the-clock skill of fund managers who have built their careers around bringing profits to their clients. These managers will be actively trading investments for their funds to try to beat a particular benchmark, in most cases, a market index. Step 3. Decide on fund types and styles. Once you decide between active and passive funds, you still have more choices to make. There are mutual funds designed for just about every investment preference, industry, and corner of the market. Here are some common fund types you might come across. Index mutual funds. Index funds follow specific stock market indices. These include S&P 500 index funds and many others. Sector mutual funds. Sector-specific mutual funds track stocks in certain industries. For example, some funds focus on technology companies. Others focus on defense companies or pharmaceutical companies. Market cap mutual funds. Small cap, mid cap, and large cap funds allow you to invest based on the size and stage of a company. Geography mutual funds. Some funds include stocks only from the United States. Others feature only international stocks, perhaps stocks from specific regions. Still, others include stocks meeting specific international criteria, such as developing markets. Step 4. Calculate your mutual fund investment budget. Investing takes money. You can start investing in stocks and ETFs with very small amounts of money, sometimes less than $5. But it takes a bit more to invest in mutual funds. As with any investment, it's a good idea to use only money that you won't need in the short term. Never, ever use money from your emergency fund. Mutual funds often carry minimum investment requirements. This means you may have to save up hundreds or thousands of dollars to get started. Step 5. Choose the right brokerage for your mutual funds. Outside of choosing a brokerage because you prefer its specific funds, there are other reasons to pick a brokerage when you're ready to start investing in mutual funds. Here are some considerations when choosing the best brokerage for mutual funds. Account minimums and fees. Try to find an account with no minimum balance requirement and no recurring fees. No transaction fee fund list. Most brokers have a list of funds with no commissions or transaction fees. This may be called a no-load fund list. General mutual fund availability. Not every broker offers access to every mutual fund on the market. Find out what's available so you know if you have a good choice of funds. Mutual fund trade commissions. If you do decide to buy a mutual fund with a trade commission or load fee, you should know what to expect. Commissions range from around $10 to $50 per trade. Step 6. Understand and scrutinize mutual fund fees. As we briefly mentioned above, mutual funds generally come with management fees that can vary by the type of fund and how it's managed. Actively managed funds generally charge more than passive funds. There's been a race to the bottom with index fund fees over the last few years. Thanks to intense competition, the average cost of mutual funds has come down quite a bit. In fact, Fidelity has come out with a list of funds with no fees at all. Fund fees are charged as an annual percentage of assets you have invested with the fund. The fee is also called an expense ratio. The expense ratio tells you how much you pay for a mutual fund. This helps you compare similar funds based on cost. That can be a confusing concept to newer investors, so here's how it works in practice. Let's say you have $1,000 invested in a fund with a 0.1% expense ratio. For that investment, you pay $1 per year in management fees. You'll pay more as your balance goes up. This is why it's important to avoid high-fee mutual funds when you're hunting for potential investments. Step 7. Build and manage your portfolio. Now it's time to buy shares and build up your investment portfolio. Mutual funds bring you instant diversity in your portfolio with a single purchase. However, you most likely will want to build a portfolio of different mutual funds to give you even more diversity and align your investments with various goals. Anyone can invest in mutual funds. Mutual funds and ETFs are among the most important investments for modern investors. Mutual funds are often a cornerstone of long-term and retirement-focused investments. And these often make up the bulk of investor portfolios. It doesn't take years of experience or a fancy degree to buy and hold mutual funds. By knowing how to invest in mutual funds, you're putting yourself on track for long-term investment success. That's all for today's video. Hope you guys enjoyed our video. For more videos, make sure to subscribe to the channel and hit the bell icon for more interesting videos. Thanks for watching and have a wonderful day.